Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Andrew Binns, co-founder and director of ChangeLogic, a Boston-based strategic advisory firm. He's also the author of Corporate Explorer, How Corporations Beat Startups at the Innovation Game, and the new book, the Corporate Explorer Field Book, How to Build New Ventures and Establish Companies. Andrew's here to discuss the impact of AI investments on corporate innovation and the risk of investing too much. Andrew, it's great to have you with us. Welcome to Trade Talks.
Hi, thank you for inviting me, Jill.
You got it. Your second book, Corporate Explorer Field Book, How to Build New Ventures and Establish Companies, releases this week. Can you tell us about it and how it relates to the AI race?
So corporates get a bad reputation on innovation, and justifiably so. Some people think it's sort of an oxymoron, corporate innovation, but like working holiday. But in reality, more often than not, they succeed. And that's why the first book was called How Corporations Beat Startups. Right? Because they have the assets, and the assets are what allows you to scale a new venture. And in respect to AI, that is exactly where corporates find themselves. They have data, they have business models that AI can enable and accelerate.
Generative AI is a hot area of investment for corporations. What do you make of these investments and impact on corporate innovation?
Yeah, they are really hot. You just have to look at the sort of results that, say, NVIDIA are posting right now. They make the chips for AI, and they're just off the charts in terms of their valuation. But here's the problem. The problem is that corporates have a tendency to spend too much too soon. And when you do that, you can put yourself in the danger of investing ahead of learning, ahead of what you know about the market. And it kind of gets wrapped up in this fallacy of let's act like a startup. And go big and go bold. And that can be a real danger.
So what are the risks of investing too much too soon? Why do you want to stay ahead of the curve?
Yeah, so you think about it this way, if you spend a lot of money building an IT system, and you're wrong about what the market needs, it's pretty tough to turn around. It's tough in terms of what you're offering to the market, making a different offering. But it's also really tough politically inside organizations to admit that this is what's happening. And there are a number of corporate failures that we can talk about of where corporations invest ahead of the market, ahead of really having a clear idea of what's needed. And that's the danger.
Well, it makes sense too, because it becomes harder to change your course. And then you also have to think about your customers as well. Are they prepared for you when you're making this pivot?
That's right. Yeah, we can all get really wrapped up in our ideas. Ideas are almost addictive. We just love to do new things. But the trouble is that it's really the market that decides whether those are good ideas or not. And you can find out if your ideas are good if you invest in small ways to test some of your assumptions. A lot of people think about testing as being a technical problem. Let's go test whether this IT works. What's more important is to just go and naively ask your customers, what do you need? What is it you're trying to get done? What difference would make us, if we were to be able to make a difference to what you're doing, how could we improve your lives? And therefore, what would you be willing to pay for? These sort of small experiments are entirely possible to do. And the payoffs are tremendous. And this new book, what's great about it, Jill, is that in the Corporate Explorer Field Book, we actually have corporations talking about what they've done. This isn't me as some management guru. This is actually the corporations telling the stories of what they've done in order to test out and scale new businesses.
Yeah, and I noticed that companies like Microsoft, Amazon, NVIDIA, you had mentioned before, they take a more disciplined learning approach, and that has contributed to their success in making bets on newer technologies.
That's right. We've really got to see AI as something that's about disciplined learning, not indiscriminate spending. Right. And if you look at General Motors, not the most fashionable company in many ways, they're in the book. And they're in the book because they're building their first direct-to-consumer platform in China. And they're doing it in this disciplined experimentation, de-risking what they're doing. Or Microsoft have been doing this for years around a number of their products as well. And we also have less well-known companies like Unica Insurance in Vienna, who have built both a direct-to-consumer digital insurance business, but then are using different digital and AI tools in order to transform healthcare in Europe. And so these are firms that have really committed to that disciplined learning approach.
How can companies and their leaders manage risk and avoid setting their own innovation back?
Yeah, so part of it is just getting your own ego in check. You know, corporations love to be the winners. They're used to being the winner, and they think that if they spend a lot of money, then that will put them on top of the pile. And it's really not the case. What they need to do is spend small amounts of money. Startups do this more naturally because they have fewer resources when they get started. And so they have to work on de-risking their business before they bring it to a VC firm, before they get through many rounds of funding, right? Corporations can spend earlier. And that's where this sort of discipline of de-risking is so important to their success.
All right, Andy, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.